The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 18th magnificent Monday edition of today's Money Masters show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a magical and magnificent Monday. I know I'll do all that I can during the next hour here to teach you and share with you really extraordinary tools for trading and investing. They're tools called the lightning bolt pattern, that A to B equals CD pattern. They're tools such as Fibonacci expansions and retracements. Of course, we've got Japanese candlesticks. We've got market profiles. We got the Chapman wave. We've got it all here at TFNN for you. Remember, trading and investing. 80% psychological. The other 20%, well, it's buried somewhere in between our ears. Let us also remember, folks, that we are not creatures of circumstance, but instead creators of our own circumstances out there. This is an interactive show, and I would love to hear from you. And that means you can give me a call at 877-927-6648. We can evaluate the markets. We can identify where price is headed to. Maybe I can help you take a look at targets, stops, you name it out there. Of course, you can call us internationally, too, at 727-445-1044. And, of course, the local number, 877-927-6648. Let me give that to you again, 877-927-6648. Too much multitasking out here for Steve Osan. Hey, it is Magical Monday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading up 125 points. She's trading out at 16,788. S&P up 13 points, trading at 1968. NASDAQ Composite up 30 points at 44.95. Russell 2000 up about 10 points, trading at 1151. NDX 100 up 25 points. New York Stock Exchange up 65. So who's leading the charge here this morning? Oh, very interesting. You've got the Russell 2000 up 0.8%, and right behind it is the Dow up 0.7% out there. Those are two laggards out there, so the mere fact that percentage-wise they're starting to lead to the upside, that bodes well for the bulls and not so much for the bears out there. Moving and grooving this morning, we got Priceline up $14. She's trading at $12.84 and change. Netflix up $8.85, trading out at $4.67, $4.68. Google up $8, trading at $5.91. Dollar General up $5. Tesla up over the $265 even Stevens swing point high. Right now trading out at $265.80. Biogen, BIIB up $3.80. WUBA, which is 58.com Inc. It's up $3.60, up 7%. Amazon up $3.40. Jazzy One, Jazz Pharmaceuticals up $3. Illumina is illuminating the skies. It's up $2.76 out there. Granger, GWW, is its ticker symbol, up $2.75. That's what we've got going on to the upside, to the downside. Intercept Pharmaceuticals, ICPT, off $6 and change, trading out of $2.78. Fabrinet, FN is the ticker symbol, trading off 16%. Yikes, holy shnikes out there. Let's go see what the heck is going on here. Fabrinet announces audit committee investigation into accounting matters. Uh-oh, it sounds like they got a bad accounting firm out there. Dewey, Hookham, and Howe apparently is their accounting firm. Let's go find out what Dewey, Hookham, and Howe has done out here. The stock price moving down with some pretty decent volume out here, and that is the trading. Right now it's got volume of 343,000 to the downside out here. Where does this thing last have volume? That is the question. Where does this last have volume out here? Well, it's trading right into that, and that was a downdraft session back here on March 15th. Let's put this again. Fabrinet is the ticker symbol out here, and looks like somebody got into the cookie jar. And let's go see where this is likely headed to. So we take a look at volume. It's the same thing on that weekly basis. It's this level back here from March of 2013, but you can easily make the case that this thing may head all the way back down, well, at least to the swing points from October of 2015 out there. Hope that no one in the listening audience is inside of this equity out here. It has pretty much been in a it's just been in a little counter-trend rally. Looks like a Gertley-ish style move off of the highs. This is a weekly chart, by the way, that we're looking at back from 2011, February 14th high to 2011. Now, it didn't even make it up to the 0.61 area, which is 23.90. In any event out there, hope that nobody is in the ticker symbol Fabrinet out here, FB. Now, that's Facebook. Fabrinet is FN is the ticker symbol. NXP, and if your accountants are Dewey, Hookham, and Howe, you might want to consider changing accountants out there. NXP Semiconductor, that's also trading to the downside, off 4% down, $2.70 out here. Let's go see what that is doing. Semiconductor index was actually pretty strong on Friday. Of all the indexes that gave outside days out there, not reversal session, outside days, the semiconductors was not one of them. There are only two that really didn't. The NQ or the NASDAQ or the QQQ or the I didn't really look at the QQQ. The NDX 100 did not, and the semiconductors out there. So even with the Russian scare, the Russian-Ukraine scare, and that's going to go on for a while out here, those two remain strong. Anyways, if we take a look at NXP Semiconductor, it's not one of the strong in that group for sure. In fact, you'd have to say that this is probably going to, well, if it can break 60.62, trade at 61.16 right now, this thing ought to pull back in this little hammer candle out here. Here's its real support level. And that's down on the trading session of May 15th. And that low is 57.71. The high is 59.73 out there. Looks like that might be a pretty decent area for this equity to target. NXP Semiconductor. To the downside, we've also got Kinder Morgan. KMR is a ticker symbol. Let's go see what that's doing. It's off $1.28 out here. Hey, really not too shabby out here if we take a look at the daily chart, of course. Kinder Morgan had consolidated its groups together. This is correct. This is had a nice high volume high. It's up above that level. It said that was going to be tested, and most certainly was tested here on Friday. Now, the problem is, and I remember getting a call from one of our listeners. Don't know if the listener is listening in right now, but he was involved in the trade early on, so he was looking at a longer-term position inside of Kinder Morgan, and the suggestion was stay inside it. Even though it had pulled back on the daily chart a little bit, the suggestion was to stay inside this thing. And, of course, that's one heck of a hanging man weekly candle out there. So if you take a look at that, folks, this is a hanging man. There's no question about that. If you take a look at last week's action out to the weekend of August 8th, it looks like a hammer, smells like a hammer. The problem is it's at an uptrend. And in Japanese candlestick charting, it's referred to as a hanging man out there. Ooh, sounds ghoulish, doesn't it? Well, the reality is, and in fact, it's listed as one of the bearish candlesticks out there. Let me teach you something. Nothing could be further from the truth out there. What the heck is bearish about that candle? Price finished up towards its highs out there. It's not a candle. I can go back and I can put hanging man candles on all kinds of charts. Sometimes it identifies itself as where price starts to move lower, what have you. But if you think a hanging man is bearish out there, give me a call and then show me a hanging man that worked out. Let's go see what else might have been inside those charts out there, because it is not a reversal signal. That is courtesy of Stevie-san out here. Now let's take a look at what else do we have moving to the downside. You've got Hess Corp, HES is a ticker symbol. That's off $1.16, not a big deal out there. Pioneer Natural Resources, PXD is a ticker symbol. Let's go see where Pioneer Natural Resources may be trading down into. This thing here has been struggling as of late, and it does have a breakout session that it traded back into. Here's the volume breakout. Let's go ahead. Let's clean up the chart out here, though, make it a little bit easier for you to follow along. We'll do this off screen. Let me go ahead and we'll turn that off. Let's turn off this. Let's turn that off. And we'll leave the volume out there. Okay, we'll just leave those. So if you're watching this on Tiger TV, let's move that moving average. So now the chart is a little bit cleaner. And as we take a look at Pioneer Natural Resources, remember our eyes need to first really gravitate towards swing points and volume out there. So use one eye for the swing and the other eye for the volume out here. Well, my left eye's got the volume one figured out. If we take a look at that, that's the last time where we saw a breakout. That's going to be the trading session here from May 7, 2014, the low 66. No, I take that back. The low is 200.13. Now, the volume out there on that break, 3.1 million shares, and it came back on August 14th with 2.8 million shares. A little bit too dicey for us, too much volume coming back to that area. But on Friday, 1.4 million shares. So you'd like to see this level get tested a few times out there. That is on PXD. Let's do this here. Let's go do a quick wave count on this PXD. And it's going to be much easier for me to do that while this thing loads out here. Oh, I guess I should have loaded it off to the side out there. It says it's loading. No time to wait out there. I'll just kind of watch it off to the side. Let's see. What else can we see inside of this equity out here that we want to be concerned with if this level here fails? Oh, we pull this back. Here's the next high volume session out here. Not really a wide-ranging bar, unlike this one. This is a wide-ranging bar out here in the trading session of May the 7th. And if that level fails, though, here's what here's what you'd really look at. You look at this swing here from the trading session of August the 7th, 1.4 million shares, and low there was 201.76, and it got below with 2.8 million shares. That could actually be an A to B equals CD to the downside out here if this area fails. So if Pioneer Natural Resources fails, let's go draw in that pattern out here. I'm going to use as my A point. I'm going to use a swing out here from July 24th. The B point is going to be that August 7th, and then 2 days worth of retracement, not much, not even a 0.382 retracement out there. That was into the high on August the 11th. That would say you'd be looking at 179 or even worse inside Pioneer Natural Resources. I'm not yet convinced that that is what is going to happen inside of this equity. Nonetheless, we'll continue to watch it. Let's see, what else do we have moving out here? All right, let's do this. Let's go take a look at the ETF structure. Let me turn all those tools back on, and we'll make it a little bit easier as we are looking at things out here. Okay, all the tools are back on. Let's go take a look inside the ETFs, meaning the index ETFs, and go see what they are doing out here. So let's start off. We'll take a look at the Qs. Why don't we start there, since that is trying to break out. Up 0.7%, up 68 pennies right now, trading out at 98.08. And as we take a look at the Qs out here, can we pull that back? Well, the Qs here, the trading session that's breaking out of this little consolidation, double top-ish area. B point of an A to B equals CD. The upside is the trading session from July 24th. Volume there, 24 million shares. Pushed into it with 55 million shares. Of course, was options expiration on Friday. So we'll take a look at today's volume. So far, 5.6 million shares in the less than an hour of trading, going after 24 million shares. Looks like a swing point taken out with volume out there. We get back, we'll go take a look at some price projections for the QQQ ETF. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. This is Steve Rhodes, TFNN. Dow's up 137 right now. S&P is up 14. NASDAQ Composite up about 34 points. Oh no! Come on, don't do that to me now. Oh, there we go. Okay, we're back. We're back in sync out here. Let's go take a look at the Qs. Little struggles out here this morning, but nothing that we can't overcome out here. So we take a look at the Qs. I was mentioning the volume so far today, 5.8 million shares. It's taken out a swing point out here from July 24. So a number of different ways for us to measure some target prices for the Qs. The first one is going to be an expansion of the most recent set of swing points. So we'll take a look at those target areas. We're going to go from the high of July 24th down to the low that was put in here on August the 6th. August the 6th was 93.92, and we had 93.97 the following day. Okay, 93.92 is the number. If we take a look at that says your 1.272 area is 98.49. So your target here, your target prices, your target areas inside the Qs, 98.49 and 99.73 are the next targets for the Qs out there. If we take a look at the potential here, why'd you do that? Well, I can, let me do this here. Let me just reset this. And it should allow me to, there we go, do that. Okay. If we take a look at, sort of does that. If we take a look at potential A to B equals CD patterns, let me just change this over to a weekly chart. Let me change this to a weekly chart out here. See if I can get, there we go. So if we take a look at the weekly chart, you can see here, now what needs to take place for a really bullish move out here on the weekly chart is the swing point is July 21st and 139 million shares. Now, last week we were up into a 164. Again, now you had options expiration on Friday, but nonetheless, and we did not see it close above it, so that's cool. So you need 139 million shares this week to take out a B point of a very large A to B equals C to the upside. The problem is there wasn't enough of a retracement here for me to really use that as the C point. So instead, we've really got to back up here. There just have not been much in the way of any retracements. The only real retracement inside of the Qs was the one that took us down into the week of April the 14th, which was a match of the February 3rd level out there. So you'd have to, I think the best approach out here right now with regard to target areas inside of the QQQ is just take a look at the expansion of swing points just as we've done out here. Market profile support or resistance, I should say, 96.93 inside the QQQ. That's on the weekly basis. On the daily time frame out here, that same market profile resistance level, which is trading above right now, is out at 95.60. So those are your support areas inside of the QQQ ETF. Let's take a look at the SPYs. We take a look at the SPY. 197.18 is where it's trading, up $1.47, up about 0.75% out here. We're taking a look at the daily chart here. Now we're going to see the SPYs are nicely up above the resistance level of its market profile. Let's take a look at retracement levels. That means from its most recent high to low, and that is the area, because there's no expansion here inside the SPYs. This is just a retracement that is underway. And as we take a look at that, we're going to the high from July 24th, 199.06, down to the low of the trading session on, looks like August 7th was, 190.55. Yeah, that's it. 190.55 is the number out there. So your 1.2, my apologies. We're trading right now into the 0.786 retracement level. So 197.24. This is the area. If there's going to be a reversal, if the bears are going to show up, it's right here. Not necessarily right now, but it would be right here, right now around this price level of 197.24. Remember, we did have a nice downdraft out here, which now looks like a one-hit wonder to the downside, 183 million shares. That was on July 31st out there. We don't have volume anywhere near that as it gets up over it. But look, closing the gap, that means closing above 196.16. It says 196.16 ought to be a support level out there. So right now, I would have to say the SPYs look like if they can take out this 0.786 area, close well above 197.24. The highs are its next target out there, and that's July 24th. I forgot to mention this during the last show, and I'll do it now. We're going to take a look at the diamonds, but we're not going to do that until we take a look at the Dow out here, because this really, so you've got the Dow is trading up pretty nicely. The diamonds are up $1.39, up 0.8% out here. We'll go check in on some volume behind the move. But what we really want to do, where is it? Come on, Steve-O. Looks like I'm going to have the opportunity to go find the chart I'm looking for during this breakout here. But come back with me. Give me a call as well, 877-927-6648. Dow's up 138, S&P's up 14. Steve Rhodes and TFNN will be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 137. S&P is up 13 right now. And the chart that I was looking for before we went to that break, it's a chart of the Dow. It's the one that we want to pay the most amount of attention to out here. Let me pull this back. And it's this 3 drive to a top pattern. So if we take a look at that 3 drive to a top pattern formed, confirmed, did everything it needed to do. That was the July 17th candle session where that pattern completed. If we explode this out, you'll see drive 1 that took place on June 20th. The second drive to the top, the next higher move, that was into that July 3rd level. And then one final move up, one other 1.272 expansion, that was on July 17th out there as the market made a high, the Dow made a high 17,150-156 intercession there. It went ahead and sold off. Nice big old bear sash candle out there to confirm that pattern. Now, what the Dow is doing right now as we take a look at it, it's trading above the 0.382 retracement level. It rejected that area. It got above it on August 14th, so on Thursday. Friday, even with the flurry to the downside, you see there's the outside day. The prior day session was exceeded to the high and low out there, and a candle that went ahead and closed in the opposite direction out there. But an outside day, not as much a bearish candle as and there was no, it was a dark cloud coverish type of candle out there. Nonetheless, a nice move up, wide-ranging bar here this morning. Remember, markets don't typically end on wide-ranging bars out there. So if the Dow gets up to the 16,839 level, that's your 0.618 retracement area. You wouldn't expect the market to end right there, meaning that the market falls off the planet tomorrow. Now, what will be interesting is here's where the selling really began taking place on July 31st. And inside the Dow, the number to be looking at is 16,869. If price gets up over that, that tells you that was nothing more than probably just automated trading based on some news event, Argentina, who knows what. But forget any of that stuff, because right when we take a look at these charts years from now, we don't know what really took place. We can't remember what took place out there. Instead, we just simply are going to look at the bars, wide-ranging bars. We're going to take a look at patterns. We're going to take a look at retracements out here. So the bulls are not out of the woods. The bulls, in order to get out of the woods, quite frankly, it's not a matter of getting back to the 0.618 retracement level. It's not a matter of getting back to 16,976, the 0.786 retracement level. It's about getting over the highs out here, getting over the 17,150, 156, because that 3 drive to a top, likewise, a 3 drive to a bottom pattern, as bearish as you can get out there. And there is nothing more bullish than a bearish pattern that fails out here. So getting above that would bode well for the bears out here. And so that's what's going on inside of the Dow. If you put that in perspective out here, that perspective says if that 3 drive to a top is so bearish, which it is, let me come back here. What do I have inside of gold here? Let me see if it was on this chart or was it someplace else. Oh, I do. So if that's the case out here, tuck this one in your feather caps, because what gold actually did on the trading session here of July 10th was it made a 3 drive to a top pattern 2. Something to think about. Now, what we've got drawn in here for gold, if it can go ahead and do it today, we need to get down to about 12.69. If it can get down to 12.69, which is another $30 or so, it would form a 3 drive to a bottom pattern. It doesn't look to me like that is the outcome, and so tomorrow we'll just simply go ahead and erase that 3 drive to a bottom pattern. What gold is doing is making a pullback. It's made it a 0.618 retracement, 12.97 out there. It breaks that level, 12.90. What is it? 12.90 becomes your next target. 12.48 becomes a target. You know, your swing point out here. So we'll just keep an eye on Goldilocks and see what she wants to do. But if you're a person, and I just throw this out to you, if you're a person that believes that the 3 drive to a top pattern was significant inside the Dow, why wouldn't you be the same person that believes that the 3 drive to a top pattern in gold? That we've marked a little bit of a significant high out here as well. Something to think about. Let's go take a look at some things that are, let's go finish off the ETFs. I never did that. I just kind of, let's go take a look at the Dow Diamond. So let me give you the numbers to be watching inside of the diamonds out here. There we go. If we take a look at the diamonds, they're trading out at 167.86, up $1.51, up about 0.9% out here. Numbers, an idea now on the Dow Diamonds here, with regard to its market profiles, up and above its resistance level. So that bodes well for the bears. Now, the diamonds here are already into the gap. They are already closing the gap that was created between July 30th and the 31st. Yeah, downdraft of 9 million shares. Friday was pushing higher with 7 million shares. Not too shabby, with the exception that it was options expiration. So we saw some more volume in the market. So today's the real volume day. 932,000 shares so far in what is a little over an hour of trading, but going against 9 million shares, I don't think so. Not enough volume here to take that out to really get us into a full-out bullish camp. If we take a look at retracements, though, from the high down to the low, the target, 168.19. That's your 0.618. 169.57 becomes your 0.786 retracement level. That is inside the Dow Diamonds. We looked at the Qs. We looked at the diamonds. I don't believe we looked at the Russell 2000, so let's go take a journey. That's up a little over 1%. That's always a good sign for the bulls when the Russell begins to lead the the charge out here percentage-wise. It's not going to lift all boats higher, but it is a good sign when the Russell 2000, especially the growth index piece of it, comes back into play out here. The Russell 2000, if we take a look at its retracement levels, I believe just above the 0.382 retracement from its consolidation high down to the low from August the 1st. Yes, just above it. It's up above its market profile resistance area, 114.31. That would be a second bullish piece of information out here. Of course, what we know about the IWM is she broke through any downtrend line out here. That was the first to break through the downtrend line. That trend line was broken here with some conviction because of the wide price spread, and that was on August the 11th out there. So it does look like the Russell 2000 ought to go target 116.73 out there. That is where she is likely headed to. Let's go finish out the SPYs. Did we do the SPYs? If we did, yeah, we did the SPYs. Well, I think we did the SPYs. If we didn't, let me just summarize it very quickly. I think we might have started out with the SPYs. It's trading right now at the 0.786 retracement level, 197.27. What it's trading at, 197.24 is the number. Up and above that level, we ought to see the SPYs go back and retest their highs out there in the 199.06 range. Let's go take a look now at things that are moving. Let's go see what's going on inside the sectors. Hey, let's go do that. So the XLK, it's in the, if you're watching this on Tiger TV, upper left-hand side of my screen. Top 10 holdings inside the XLK, all green. Top 10 holdings inside the XLF, all green. Top 10 in the XLV. Now, these are all weighted ETFs out here. And the top 10 holdings oftentimes represent well more than 50% of the actual sector. XLV, number 3 weighting inside the S&P, all green out there. The XLY, all green. The XLE is the one that is struggling. If we take, and so the XLE is the only of the top 10. So top 10 in each of the sectors, including the utility sector out here. You got the utility sector that is moving to the upside with regard to, except with the exception of PG&E and PPL Corp out there. And Freeport-McMoRan is the only one that is not participating. It's out 2 cents, so no big deal inside the material sector. Otherwise, the top 10 holdings within inside each of the sectors of the 9 sectors inside the S&P 500 moving to the upside with the exception of the XLE. So, if you were on the bearish side out here, where is it that you should be looking? Yeah, it's the XLE. It's the XLE for sure. In fact, let's go take a look at the XLE ETF. Then we'll go take a look at some of the holdings inside there and see what they're doing. So we'll pop the XLE up on our screen out here. And so if the market's going to turn, this would be the sector that you likely want to first look at. Now, the XLE, moving average-wise, it's still in bearish formation. The XLE has not been able to, it's trading at its point of control, so its largest congestion area for price out here of its auction, as John Logan refers to it as. If we take a look at its resistance level, 98.09 is its market profile resistance. That would become the area where, if the market were going to turn, you'd like to be able to sell from that level. So the XLE just really struggling. It does not have a high volume high. It has volume off of the highs, which was the trading session of June 24, 2014 out here. So just really been consolidating sideways out here. Cannot get its act together. Now, let's go try to find out why. ExxonMobil, numero uno weighting inside the XLE. So let's go see what chart patterns we've got inside of ExxonMobil. Well, there's your answer. Where is it trading at? Yes, your point of control, your light blue line of its market profile out here. Hasn't busted through support, which is at 98.48, but nonetheless, ExxonMobil really had a big downdraft session. That was on July 31st, and it's nowhere even near trying to test the top of that level out at the 101.98. Just imagine if the ExxonMobils are pretty decent weighting inside the S&P 500. If ExxonMobil was participating in this rally, you'd really see some movement inside the market. So that's ExxonMobil. Chevron out here trading off 0.25% this morning, down 34 cents. Chevron taking on its support level of its market profile. 122.49 is what it looks like is the market profile. It's trading out at 125.77. The swing point of a potential AB equals CD to the downside is August 5th. 8 million shares, the low of 124.58. So far, the volume today, only 1 million shares. Volume not too bad, unfortunately. Not too bad to the downside out there. Nonetheless, it's still trading in support. It needs to take out the price point of 124.58 in order to confirm an A to B equals C to the downside. But Chevron out here, looking to be rather bearish, not bullish. How about Schlumberger? Up a nice $1.43, up a little over 1% out here. Let's go see what Schlumberger is doing to pull up the troops. Now, Schlumberger came back to a breakout area. So if we're in a real strong bull market out here, Schlumberger looks to be pretty good. Why do I say that? Let's do this here. Let's go ahead and remove some of the studies off this. Always nice to start with a little clean chart. So let's go remove that. Let's go remove these two things out here, and we'll leave it just like that. Now, if you take a look at the Schlumberger chart, what is it that you first notice? Remember, we got eyes that need to go where? One eye to the left, one eye to the right. One eye is going to pick out the wide-ranging bars. The other is going to pick out volume. Well, we're one and the same right here, right now. And as we take a look at this right here, you can see that prices right now into that area where it had broken out from on much lighter volume out here. So if the energy sector can get its act together, which it has not right now, if the market truly has its act together, then where you want to be looking at, I would say, inside the XLE is not the XLE. Here's the trend line, by the way. You can see that Schlumberger is not broken. I would take a look at this trend line. I would follow Schlumberger to give us some kind of a feel. Or, if you're going to be long, the XLE is not the place to do it. If Schlumberger can break through this level, that may be a different story. Hey, let's go to one of my favorite cities, Tallahassee. I've got a daughter who graduated from FSU up there last year. Today is her first day of teaching high school math out there, and she didn't get all her textbooks. Go figure that. So I told her I gave her some information. I said, talk to your class, teach them about Leonardo, not DiCaprio, but Fibonacci out there. But let's go to our man Ben in Tallahassee. Ben, thanks for calling. Thanks for holding. How you doing today?
Left here, but I just wanted to touch base real quick on the diamonds. I really like how you're combining a number of different techniques, and wanted to see what your thoughts are on number one. I didn't get a chance to see where the volume's at, but I think you were saying a few minutes ago that the diamond volume was real low as of today.
It's 900, so it's 1 million shares, basically, and that 1 million shares is going in the downdraft of 9 million shares. So, even if you multiply it times 6.5, if volume maintained itself, it's the first day of options rollover, so you would expect higher volume anyways. But it doesn't, it's kind of weak, but continue on. So volume-wise, if you're going against a downdraft, it's not there.
Yeah, so... again, knowing that you're putting together some really good techniques, and maybe even the most important point, at least what I've seen over the last several years with this very strong Fed-driven market, that volume is a good indicator, but to me it's been a okay indicator.
Absolutely.
I just wanted to see where your take is when to me this actually is another one of those critical points where, wow, is this a bounce, right to another leg down, or is this a true upside reversal? And here we are, right? The diamonds are showing light volume in comparison to the downdraft, but yet, as we've seen over the last 2 to 3 years, when you got the Fed behind the wheel, the volume again has proven me wrong a few times, and it's hurt. What's been, I guess, having said all that, what other indicators do you find really helpful, kind of like your top 3 indicators, in addition to volume, that really help strengthen your stance in where this trend is going?
Well, Ben, you'd almost think that you and I were cousins and that this was a setup call, which it's not. So stay tuned, and I'm going to answer your question, and we're going to specifically come back and take a look at the Dow Diamonds. So stay with us, folks. Ben and I, we're going to go take a look at the Dow Diamonds and try to answer what additional tools should one use, especially on the Dow Diamonds. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you?
Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 153, S&P up 15, NASDAQ Composite up 38, and we're on the line with Ben from Tallahassee. And to summarize, Ben's question was, what other tools can we utilize other than volume to analyze a chart? Would you say that summarizes your question, Ben?
Yeah, I've been a subscriber of various newsletters on TFNN. I listen to pretty much all you guys all the time, and I usually try to take at least one or two techniques from each of you and try to combine them all. And as we all know, there's no crystal ball in the stock market. So,
there's not, and there's not for sure. And this is what I've learned, and what I put up on the screen here is that when we take a look at the trading pyramid, I break it down into wanting to understand what the broad market trend is first, right? Trade in the direction of that, and then you want to take a look at specific areas of support or resistance inside an instrument. I think the TAS market profile, swing point volumes, those are key levels in order to be able to help us identify levels of support and resistance. Okay, so you get those two things nailed down. Then, when you take a look at an individual stock, you break it down into four areas. And quite frankly, it's not all weighted equally. It's not 25% for each area with regard to an instrument. And you specifically are breaking it down into volume. So you're looking at supply and demand. That's always a portion of the trade, but only a portion of the trade. You then have to take a look at the volatility or liquidity within inside that specific instrument. You also need to take a look at the momentum and the speed at which price is traveling. And then the energy, which is the angle. And I've broken that. I've got it on Tiger TV here. I've just identified some of the top indicators that one can use for those different areas. So, for example, in volume, you could just straight out use volume, or you could use a money flow index, or you could use on balance volume, or you could volume rate of change. Those are all typical indicator tools that are available on most charting software packages that are available. Utilize one of those. Have one of those tools on your chart. For momentum, you can use stochastics. You can use relative strength. You can use the commodity channel. You can use the Williams percentage R. You can use use one of those to help you to identify the momentum. When it comes to volatility, you can use Bollinger Bands. You can use standard deviations like Daryl Martin teaches us. You can use Keltner channels out there. Any one of those or others, there's others, will help you to measure the volatility, liquidity within inside the instrument that you're looking at. And then finally, you've got that energy, that angle out there. David White and Tom Software, the Art of Timing the Trade, the Power Law Vector Indicator that's in there is a great tool for being able to measure. It's the best tool I know to measure energy. But you can use Gann swing bands. You can use MACDs. You can use moving averages. In my opinion, what you want to do is you want to use one from each of those areas, Ben. One from each of those areas to assist you. Now, I will tell you specifically, I did a study, this is a couple of years ago, and inside the diamond specifically, I'm looking for it. The diamonds, as I measured it over a series of years, there's to the long side, the tools that work best to figure out that momentum and the speed. It's a tool called the Intraday Momentum Index out there. For the angle out there, because I wasn't able to test the David White system, it's the what's called the Wilder's smoothing. For the volatility out there, the Keltner channels work best. For volume, it was the on-balance volume tool that worked the best on the long side of trading the Dow. On the short side, it was different tools, actually. It was something for that velocity, for that momentum, that speed. It's a tool called the Ultimate Oscillator.
I'm sorry, Steve. You're saying you had a favorite tool for the diamonds?
Oh, I just gave you some of them. Ben, tomorrow I'll cover it during the... did you listen to the first hour?
Yeah, I mean, really, I was ultimately looking to see where your head was at with the diamonds, not your favorite tool. So
yeah, I'll cover that tomorrow. Check back in with me tomorrow morning. Unfortunately, we're at hard break at the end of the show. Hey, thanks for calling. Take care. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.